I thought it was important that you see uh, how uh, indicators can work after a gap down or a significant price movement. The example I'm going to show you is a gap down situation and how the indicators work after that, because in numerous videos I've commented about staying away from trading when you're near a gap down. And the primary reason is because your fast lines, like for example your trend red and trend green, they show what would appear to be an uptrend. And it's really the equilibrium is out of balance after the a strong gap down. And typically, as in this example, there's many other indicators that show the proper direction, but we have a tendency to watch the trend red and green because of its ability to show us what's happening in the market so quickly. So it's kind of a catch-22 situation. But the important thing to recognize is that yeah, you can see your way from any issue that's a problem, because sometimes you find a gap down and you go, oh, and you forget that, hey, a day or two before it did gap down. So this is a example that I'm going to use. The green line is on the trend red low angle up, which is very typical for a uptrend start. What is not typical is that you may not recognize this, and it's something that you learn as you work with these indicators. But the trend red low angle down or low angle up typically occurs 4 or 5 days out from the trio cross under zero day. And yesterday, the day before this green vertical line, the trio, trend trio, yellow, pink, blue crossed under the zero line. And so it's really not normal for the trend red to go into an uptrend the day after it crosses under the zero line, because the trend trio excuse me, the trend trio lines are slow moving lines and they don't react. It takes a lot of force. They certainly could go up in a day or so, but it takes just a lot of power to move them real quickly in the opposite direction. And so this is and it's a result of the gap down. I mean, it went under zero because you had a huge gap down in this particular situation. Anyway, the first thing I'll identify is you have the Zip Zion, excuse me, you have Zip Zion highest and going down, and we know that when that is highest and going down, it is an indication for a downtrend. So it's not likely that this trend red in a uptrend position is going to do that. But that's the first indicate, and all the rest of these indicators that I'm going to talk about are downtrend indicators. Zip Zion is a classic. You've seen me comment on many of the situations in the past. If you go over right into this area, you can see all these red candles dropping down, and here we have Zip Zion going down, looks like 6 days or so. Same thing. Now, back onto the green vertical line, you've got zip green in a pinpoint at 0, and it technically qualifies for a pink-green bottom. They don't, and in this case, it ended up being a pink-green bottom pinpoint. But in order for a pink-green bottom pinpoint to go up the next day, zip pink needs to be lowest and next to the zip green at 0. And in this case here, zip pink was at 9, and your blue was at 6, the yellow was at 6, zip gray was at 8, zip red was at 22. So it didn't qualify for next day up under the parameters of a pink-green bottom. You also have in the power chart, you have power green has crossed under the orange, and that's a very strong indication for the start of a downtrend. And if it's above 0, you know from the formulas for when power green is above 0 and going down, it's not as strong as when it's below 0 and going down. And on the green line, power 0 is at -4. And so it's crossed over under 0, which makes it a much stronger downtrend push, or it has more power that we can track, put it that way. Power, let me move this up a little bit so we can see it. If you notice now, while I've got this thing expanded, power red is under 0, and you may not know, but I'll refresh your memory. Power red is a position indicator. It tells us by its position under 0 that price has a tendency to go down. When power red is above 0, price has a tendency to go up. So power red wears a few different hats. The big 3 are trend red, power red, and zip Zion. And when those 3 are lowest, the power that they have together in being lowest typically causes an uptrend of a few days. Same thing when they're all highest. Can't tell you why exactly, but it happens. They somehow get a hold of some. They track some. Maybe it's 3 different types of power within the market. The stock, I don't know, but we do recognize the ability that they have. Swing gray, if you go down here into the bottom chart, swing gray is looks like about 4 days ago was on a peak, and that was probably the peak of the downtrend, because 3 days from this green line was the peak of the whole area, recent area. And swing red is down as well. Trend trio is down, and green, power green, and orange are down. So 6 out of the 7 short-term trend lines are down, which is significant, all pointing to a downtrend. And I'll point out one other thing here. The other deep cycle indicator is power pink and blue, and both of those are down. And at this point, we can't tell if we're at the bottom or not, but we do recognize that we're in a deep cycle. And in this particular case, both the pink and blue, power pink and blue, the deep cycle, are down, and swing gray is down. So there's just this example is loaded full of indicators that tell us that the price is going to go down next day, and several of these indicate more than one day. And so it's exciting to see these indicators tell you what's going to happen. It's absolutely amazing. The caution signal or the warning signal is not to trade after gaps down, or in this case we had two big gaps down. And you know, I'll just give you, on this green candle, it was the stock was $267, and on this day, on the red green vertical line, it closed at 178. So, I mean, that's like $90. It lost a third of its value in 3 days. Huge downturn, and classic. You know, the trend red and green are fast lines. So are several of the zip lines. And they're all trying to go back up into a state of equilibrium, because the equilibrium has just been kicked out of balance. And so they react by trying to get back into balance, but the price continues to go down. And the other indicators will tell you that. And so that's why the caution is there not to trade near a gap or a strong down movement. And they're not always as visible as this, but I happened to run into this one in some other activity I was doing, and so it's a great way to identify what not to do near gaps. Just a one final comment. Trend red is at minus 252 right now. So good example. I firmly believe in sharing this type of thing in this system, so that you excuse me, this lesson or this video can have a much greater impact than some of the others, because it tells you about the other side of the indicator movements, and of course the reasons why. So you need to recognize what equilibrium can or can't do, and how it gets thrown out of whack, and just identify those few times when things are not working right. So normally what you'll see is whatever's there on the indicators, the vast majority of them are pointing in one direction. I'm not sure what the ratio is, but there's a high percentage of indicator movements with all the indicators pointing in the same direction, and then there's some that are mixed, but they can still have strong movements. It's just they're mixed typically because the power from the last several days, or I should say, I talk about power, but in reality it is the floor traders. The floor traders in the last several days have been pushing the price down. For example, they push the price down, and they continue to try to push the price down the next day. And in fact, maybe it may open and go down significantly and then go back up, because they know they run out of bullets or run out of stock to buy or sell, is what it amounts to. So it's a great, this video is a great way to see how things work. And I will close with that.